Good morning all and welcome to this morning's video. So this morning I have my camera on, as you can see. I thought I'd just change things up a little bit. And I also have three pairs on watch. So those are Kiwi CAD, Kiwi Swiss and Sugar USD. So my favorite of the bunch is Kiwi CAD. So let's break that down for you now. So we can kind of separate these structures, the things that jump out at me. The things that jump out at me immediately is we have this structure here, this kind of failed continuation where we have the 1, 2, the third drive, and then it doesn't commit. Instead, we break to the downside. Okay, we come back up and then we leave a footprint there. Okay, and then what do we have here? If we just analyze this, so we have the high there, we have a very sharp move suggesting that there may be a lot of liquidity here. Very sharp move up, very sharp move down, given that we're on the daily chart as well. So that was a big run off there. The other clue is that we come back up to the area and we near miss to it. We get close. Okay, price starts to sell off. It finds its way back up there, and likely what it's doing is it's people are trying to sell this whilst the orders that are still up here are being placed in that area, especially when we're in this area. Okay, I'm sure many people would have started placing their orders up there. These are dragging price back up. So even when we sell off here, although it was an aggressive sell-off, and as I said yesterday, we don't necessarily need to wait for price to get to these extremities before we look for sells or buys. But likely the reason this didn't commit all the way down to here is because this was dragging price up, the orders that were there. So sure enough, we get this kind of, let's just clean that up a little bit. Okay, so we then get this kind of structure, okay, where we tap into a sharp move. Okay, so we tap into the sharp move down, very sharp move up, which broke through this brick wall high and this one as well. So there must be a lot of liquidity there for that to have taken place. I'm just going to leave it a few seconds. When these alerts go off, it seems to mute the video, so I always leave it a few seconds before I start speaking again. I'm not quite sure what that was. We'll find out in a minute. So we break below there, as we often do on the higher time frames. Bit of a strange, this is where the sequence gets a bit strange, right? And even this, okay, so if this was a move, because it could be that, because we have these highs up here, okay, set just above here, if that was a move to take them out, we wouldn't normally start a move up from here like this, okay? It would more likely be a series of impulses and corrections that just follow through like that, pardon the expression. And we would, likely perform corrections like that if we're going to go all the way up to here. So the fact that this move up started like that with the scoop all the way down, which actually near missed that area, gives me a clue in itself. This is I'm being quite granular here, but gives me a clue that this, although this move has been quite direct, maybe this was the clue that actually we're going to respond from this area, which we keep near missing to, or which we near miss to there. Okay, respond to the area and then push to the downside. We also had, just to touch on it, we have a bit of looks like another bit of a FOMO move there. Okay, what happens? We get close to these areas again, start to sell off, and then price finds its way up to there. So what I'm going to be looking for today, this is one of two things. Okay, so if we analyze this, you can see we've come down. Many people, I'm sure, I can almost guarantee it, would have seen that as a retest of that high, okay, to get long. Now, either this is one of two things. So either this is people thinking this is a retest, they get long, and then they get completely washed out. Okay, and there's also people selling here too early, people getting involved in the sell too early, they get washed out, and then this just drops like that. Or this low here will act as the base of something that looks more like this. Okay, and then I would actually consider getting long, because that would be a very deliberate structure there. If we get something like that, that's got a 1, 2, 3. I'm not drawn that great, but if we get that, that is the market saying, look, we're not going short. There's been a change of plan, and this is just volume accumulation for that next leg to the upside. But obviously, you don't need to be a genius to work out, if you just count the candles at the bottom of the screen, that wouldn't be ready until about Wednesday morning at least. Okay, so I won't be looking for that today, but I may be looking for it later in the week if what I'm looking for today does not occur. Okay, does not shape up, if that makes sense. So what I'm looking for today is for price to push down below, so a 1 hour impulse down below the area of interest. So there, if after breaking above this, we then impulsively break back below this area of interest, that is very, very deliberate price action. And we've also, therefore, if I wait for it to get below there, we've also negated the fact that, if we try that again, we've also negated the fact that something like here, for example, could actually be part of a larger structure itself to push higher, okay, because we would have well and truly dropped out below that low there. So I'll be waiting for a 1 hour impulse down below the area of interest, so that line there, and then either a 2-touch 5-minute continuation where I would get short on the break, or a 2-touch 15-minute continuation. These are minimums. And then I would look to get short with a 5-minute risk entry within the structure if I could get it, or a reduced risk entry on the break. I would be able to manage this. We would likely follow through, pardon the expression, with the same level of aggression as we moved up. So therefore, that would likely take us down to there for something in the region of 3.5% to 4%. And then my target would actually be here, just to kind of, because I think there would be, it's not that I necessarily think it would stop there, but that would be somewhere where I would anticipate people getting out, and that would be, it would also be the start of this overall move up, if you see what I mean. Okay, all these lows dipped below there, so therefore that is the start of all of this correction. Okay, and then that would give us something in the region of, what would that give us? Something in the region of, about 8.5% to work with. So very nice, and I would mechanically manage that. I would place the tool there, and let's just change this because we've got the wrong template on. So take profit, there we go. And usually that lines up with something of significance. Not always, but I do apologize if you can hear the boiler going in this room that I'm in at the minute. So that would take us down to there. So I would set a take profit there and trail my stop loss accordingly. So that is Kiwi CAD. I do apologize, that boiler behind me in the cupboard is very, very loud. Someone's fired that up, but the joys of live broadcasting. So Kiwi Swiss, what was that alert that went off? West Texas oil. Okay, so Kiwi Swiss, I'm going to try and work through that noise that's in the background at the minute. So Kiwi Swiss, we have this kind of structure here. It's a bit of a ugly one, but that's Kiwi Swiss for you. Then we have this little mini running channel which sells off. So the origin of this move is here. Okay, and you can see we've well and truly tapped into that, broke above, caught people the wrong side of the market, and then pushed down. We even have, let's have a look. We even have, so on the weekly, quite a bearish weekly, bit of a wick below it, but that's Kiwi Swiss. It's a very corrective pair. But we wicked above. There we go. We wicked through and not to the area of value, so that's a tick in the box. And if we just analyze this on the daily chart, you can see we've left a footprint, very impulsive sell-off, and often after these 3 daily candles like that, 3 bearish daily candles, we often get a sideways correction. So that makes contextual sense. You can even see here, to some degree, we have this little ending structure. So where we have no structure at all, and then suddenly right at the end, we get the first drive, second drive, third drive. We wick there. You can see there we wick to the area. When we wick to it, we usually fill the wick and break above. So we have that structure there. A bit of a FOMO move there, and then we have that 1, 2, 3, and then what I like now is that we're trading through that. Okay, so that's suggesting that price did not find enough liquidity here to send it to the upside. It's not logical really that it would, but that's what I like. It would have been better if this was underneath here, but it's not about perfection. It's about stacking the confluence. If this was sat just above here, then that might be a different story. but you can see that we've left a bit of a footprint there. Okay, and you can see what have we had? What looks to me like a bit of a FOMO move again. So we have the high there. We get close, we start to sell off. The orders that are still up there and being placed in that area, and that would have been placed in that area when price was in this region, are dragging price back up. So what are we looking for? We have a bit of a base now, okay, but it looks like either we're just going to sell off. If that happens, then I'm just going to leave this alone, or we'll likely find liquidity from there, or that base there, and then push all the way back up to there. And if that happens, what I'll be looking for is the following. I will be looking for a tap into the area. I looked at this last night, and I thought, is this a 3-touch or isn't it? Okay, so because we kind of have that with that 1, 2, 3, and I thought to myself, if I've been trading this many years and I can't determine whether this is a 3-touch or a 2-touch, then it's probably not. It's probably not a 3-touch. And if you just flick to the line chart, that high doesn't occur anyway. So this is more of a 2-touch, in my opinion. So therefore, I won't be looking for a risk entry from the top, especially as it's also almost a 4-hour structure now as well, because I can see the structure on the 4-hour chart. So what I'll be looking for is a tap into the area, a 1-hour impulse down below the area of value, and then the same as I was looking for from on Kiwi CAD, a 2-touch 5-minute continuation or a 2-touch 15-minute continuation, and then I'll be able to manage it down to here. I think there's economic data coming out from Switzerland in about 15 minutes time, I believe. So that might be why price is starting to move, but I will be able to manage that down to there, something in the region of 3%. And then my target will actually be this low, okay, because it's the start of this overall move there. You can see it taps into that area, and it also retests the back end of all of this. So I can see that being a profit taking area, even if price did actually continue moving in our forecasted direction, and that would give us something in the region of, if I mechanically manage that down to the 90% area, something in the region of 13%, which would make contextual sense, because if we measured that, okay, and we assume that the leg out is of a similar length, and we assume that the volume often dictates how far price can travel once it breaks that would also take us down to that area as well. So same rules. Set a take profit at the 90% area, and also trail my stop loss accordingly. So that is Kiwi Swiss. I'm going to move on to the next pair and say, if this just dumps off, then so be it. But I wouldn't be surprised if price responds from these lows because of that near miss to that high. So that is Kiwi Swiss. And last up is Sugar USD, back on watch. Sugar doing what I've been thinking it would likely do for a little while now. So on the higher time frames, you can see we have the high there. Okay, I've touched on this previously. I'm just checking the time because I've got only got 20 minutes on these videos. So we had this high here, and we had this one here where, so volume was triggered here, and volume was built here by way of this correction. Okay, now when price sold off here, it didn't find enough liquidity to impulsively break that low. It corrected through the low. Okay, when price sold off here, it found enough liquidity to break through this brick wall low. And as I said previously, not just any brick wall low, but a very sharp move where there must have been a lot of liquidity. So if price aggressively sells through an area where there must have been a lot of liquidity, then there must have been a lot of liquidity here. So therefore, it's no surprise to me that when price came back up here and tapped into this, it didn't respect it. It respected the more attractive area of value, because that's what investors and bigger players are looking for. Business people like myself looking for better areas of value for either a buy or a sell. Okay. And then, so I'm not surprised. The clue that we were going to come back to these areas was the near miss to these highs. And then tap into either one of them, most likely that one for the reasons just given. We then have the other clue was the 1, 2, 3 last leg, where the legs were of a similar length. Whoops. But look at how price sold off. Price got to this area, it sold off much more correctively than it came up, suggesting that price needs to come back up to that area. Why does it need to come back up to that area? Either because it needs to find more liquidity, sat likely just above that high, or because it needs to find liquidity from another liquidity point, but there isn't really one of any significance until all the way up there. So it's probably just forming a bit of a scoop double top. Okay, what happens? We come back up to the area, we tap into it, but we've already tapped into it, so likely we need to break above. Okay, and then we get this kind of, I can just see that on the fly. You can actually see this little expanding pattern there, where we have 1, 2, 3. You can even see the middle section, even without me dropping down. And then we start to sell off. Bit of a strange start to the move, but sometimes that happens. Then we get the sell off. Okay. What I like now, you can see we've had impulse correction continuation, and that we've broken below that low there, which was kind of the base of this. Okay, and to some extent, probably forcing it a bit here, kind of the retest in the back end of all of that. So that could have been an area of significance, but this is why we wait for these corrections a lot of the time, because we wait to see what the market thinks about these areas. Okay, and the market just completely, the price just completely smashed through and corrected underneath, okay, suggesting there wasn't enough liquidity there to send price to the upside. And as I said previously, there was clues. Sugar USD has got some interesting and very informative price action. Okay, so this could have been a reversal structure there, okay, to reverse from that area. However, the clue for me that it wasn't was the depth of this middle section. Okay, when that usually happens, once we break below the middle section, often this amount of volume will give price the legs to completely smash through. And if it smashes through, it's likely, given that that wasn't as necessarily a massively significant low, it's likely it will just smash through, form a hook print, and then gravitate back towards that hook print. And that is what seems to be happening. Okay, so with 3 minutes of this video left, what I'll be looking for is I'll be looking for a tap into the area of value, the area that we keep coming close to but keep missing. Okay, and then I'll be looking for a push down and a flag. Yes, there is an element of, if it was to form like this, there is an element of kind of retesting the back end of this. That is a factor in my thinking. But if we tap into an area of consolidation such as this, and which also happens to be the retest of the back end of that, okay, a higher time frame, something which we can see even on the weekly chart, then it's likely that by that point, if we tap into that, come back down and correct, it's likely that these highs there won't hold much weight, and then this isn't a retest of the back end of all of that. So in this instance, because we're positioned further on in the run, in the higher time frame run, okay, and just because of a few other variables, like for example that sharp pullback, I won't be looking for a 5-minute flag. I'll be looking for a tap into the area of value, a push down, and a 15-minute continuation as a minimum. Okay, so just mitigating risk a tiny bit more than I would do on the other pairs, which are positioned a bit better. Okay, and then I would look to get short on the break or within the flag, and I would be able to manage it down to that low for 5.5% to 6%. You could take profit there, but in this instance, I think it's likely, if we get that the volume that's been built there will give price the legs to carry it through to these lows here, the base of all of this volume. Okay, so that's what I'm going to be looking for today, folks. I hope you like this video. I hope you enjoyed it. Hope you like the new format and me showing my face on screen. We did a webinar within the Falcon community last night, and there was a speed networking event at the end, and it was nice to be on camera and see people and stuff. And I think being on camera helps people to sort of feel like they know you a bit better. So I'm going to put myself on camera here. I've been doing stuff like that for many years, so it's nothing that's new to me. But I think it helps a lot of people to actually feel like they know you. And also, if you're not within our private community, perhaps also makes you feel that you can trust the person who's given you the information as well, by the virtue of the fact that they're willing to put their face on cam. Albeit a lot of my face is blurred out by this boom mic. But anyway, I digress. I hope you like the video. I hope you like the new format. And I will see you again, most likely in tomorrow's video. Have a great rest of your day.